Good evening, everyone. This is That Crypto, that channel. My name is Denis Serebrakov. We are talking about Bitcoin versus gold today. And we have a guest, Mayor, who has a deep knowledge of gold, as I understand, right?
Well, I've been investing in gold for quite a few years in various forms, and recently I've also started hodling Bitcoin.
That's awesome. So that's what I was thinking, and I will be going through the presentation. If you want to add something, or maybe I say something wrong, you just jump in, correct me, and let's go. So first, I wanted to look at the money. What is money, and why we even have money? And I actually talked about money here a few times, and the traditional theory that first we moved from the gift economy, where people didn't have any sort of money, well, just were giving the excess of produce, food, or I don't know, wood, or whatever they have, and then the other party would give them back at some point in time. And then people would move to the barter economy, where we would trade without the money. I would give you some beef, you would give me some pork or something like that. But recently I kind of heard another theory that there was no barter economy, so it was just a gift economy. And people kept the debt count in their heads, like both parties. And sometimes when they lived in small villages, maybe 100 people, so everyone was owing someone else, and they were trying to keep this in the head, and probably they were discussing who should pay more, something like that. And then someone would come up with an accounting method with sort of money, that some sort of token would represent a certain amount of debt. And this is how the money were created, from the gift economy directly to the commodity money. And maybe they started from something like leaves or shells or glass beads or whatnot. But if you use the tree leaves, they're everywhere. So anyone can collect a lot of leaves, and then was trying to get something in return. And this is not the good money. The good commodity money must be scarce. So it shouldn't be easy to produce money. It shouldn't be easy to go to the tree and pick up some leaves and then exchange it to something real, the real food or a real product. Well, they also should be durable, because if I go hunting and I bring a lot of food, I give it to you, get some money from you, and if it's just leaves and they rot by the next week, so I can't get anything back from you again. So something durable, something unforgeable. So no one wants the other party to create their own money, and preferably it should be divisible. So if one token means one cow and I just want a couple of pounds of beef, then nothing can be done. And so I like this quote from Nick Szabo. So, what do antiques, time, and gold have in common? They're costly due either to their original cost or the improbability of their history. And it is difficult to spoof this costliness. And actually, this is a quote from when Nick Szabo is discussing e-gold. So I'll read a little bit more. There are some problems involved with implementing unforgeable costliness on a computer. If such problems can be overcome, we can achieve bit gold. Precious metals and collectibles have an unforgeable scarcity due to the costliness of their creation. This once provided money the value of which was largely independent of any trusted third parties. But you can't pay online with metal. Thus, it would be very nice if there were a protocol whereby unforgeably costly bits could be created online with minimal dependence on trusted third parties, and then securely stored, transferred, and assayed with similar minimal trust. Well, Nick Szabo on Bitgold. So it was before Bitcoin, so there was no solution at that time. And I want to introduce this, it's not the function, it's kind of quality of money. It's called the stock to flow ratio, money or commodity. So what it means. Stock is how much money or commodity we have available right now. If we're talking about gold, that's a gold above the ground, the entire gold. If we're talking about Bitcoin, that's all Bitcoins minted right now. It's 17.9 million. Flow, it means how much gold we produce per year. Usually it's per year, or how many Bitcoins we mint per year. And according to Saifedean Ammous, the author of the Bitcoin standard, he actually looked deeper into stock-to-flow ratio, and the high stock-to-flow ratio of gold makes it the commodity with the lowest price elasticity of supply. So right now we only have 1.6% of annual supply of extra gold. And if the price of gold goes up, like it doubles, it creates incentives for the miners to produce more gold. So if they produce even the double of the supply, so it's going to be only 3%. So it doesn't affect the stock a lot. So it doesn't dilute the gold, the supply of gold. If we look at the silver, the stock to flow ratio is 22%. Stock to flow ratio is 4.5%. So it's and platinum, for example, people are asking why we don't use platinum as money. The stock of platinum is 86 tons above the ground right now, and annual supply is 229 tons. So the platinum is used in, I assume it's an industrial metal, even though it's probably more expensive than gold.
It's only half as much right now.
Yeah, the price? Yeah. But some metals are more expensive, but because of the stock-to-flow ratio, it's... we were mining gold for like how many, 5,000 years or something like that. And because the gold is very durable, it doesn't rot, nothing happens to gold. So whatever we've mined during this 5,000 years, we still have it. And by the way, 185,000 tons is not actually that much. If we collect all the gold and melt it into one cube, the cube will only have a side of 21 meters, something like that.
It's 19 times heavier than the same volume of water.
Yeah, well, it's heavy, but it's just by volume, it's not the same. It's kind of like 3 or 5 Olympic swimming pools.
It's not that big, yeah.
Yeah, after 5,000 years, so we have this supply. And Bitcoins right now have the stock-to-flow ratio about 4%, so it's closer to silver. However, next May 2020, there will be a halving of supply in Bitcoin. That's in the protocol, and the stock-to-flow ratio will be the same as gold, roughly. Do you have anything to add? No. Everything.
I guess the stock to flow to gold will increase as the price of gold increases, and there's more incentive to mine gold. So that is variable.
Yeah. So yeah, that's correct. So if the price of gold goes up, we can always mine more gold. So
deposits that are not economic at $1,300 gold price might become economic at $1,500. As a matter of fact, recently, some stocks that I follow, they made a press release that instead of selling some assets, they're going to actually put them into production because they become economic.
Well, yeah, that's true. So if the price of gold goes up to 3,000, so we will have more miners trying to dig out the gold that is not easily reachable right now. However, if you compare it to Bitcoin, the supply of Bitcoin doesn't depend on price. It's algorithmic. So if the price of Bitcoin goes up, more miners will join, obviously, because it's profitable to mine. However, the protocol itself will adjust the difficulty, and we will still be producing the same amount of Bitcoin every 10 minutes. So one block will be produced every 10 minutes. That's actually the beauty of Bitcoin, and maybe it's like one of the best features of the protocol. That's the change of the difficulty supply, well, difficulty adjustment. Yeah. Okay, let's. Yeah, and as I mentioned, so we use gold as money because it's durable, because it's divisible, and the total supply is 185,000 tons, a cube with a side of 21 meters. However, if you look at the gold with all its benefits as money, maybe it's the best money out there. So it has some disadvantages. For example, we need to store gold somewhere. Obviously, in comparison with electronic money, with Bitcoin in this case, the storage requires some investments and it's costly. When we trade gold, we also have a lot of paper gold right now, and because no one wants to store the gold at home, so we do all the trading electronically, and you never know if you really keep the gold or it's just some sort of an ETF or a paper gold, something contract for difference or whatnot. And if everyone would do the gold run, would request their gold, there wouldn't be enough. And also, if you keep the gold, like gold bullion, for example, so it's really difficult to understand if it's real gold or if it's something else. So the authenticity, it would require chemical analysis, and maybe you know more how they just test the gold for authenticity.
I don't know much of the details, but apparently one reason why maple leafs and other similar gold coins are popular is because they are accepted more or less as they are. But if you get a gold bar from somewhere, it needs to be verified, as you pointed out, before you can realize on it at full value. I don't know exactly what it entails, which is one reason I prefer to just buy maple leafs or eagles. Those coins that are well known around the world are pretty standardized. And as far as storage, I guess if your objective is to have a lot of gold as a hedge against whatever, whether it's a devaluation of your fiat currency or some catastrophe of any sort, eventually if you have too much of it, you're going to need to find some secure way to store it. And I would suggest that the best way is probably to store it in your property. And I've even heard some people suggest, if they have a garden, to dig really deep and store it in your garden, seriously. But of course, nobody that owns a lot of physical gold will really tell you where they put it, right? So you have to leave it up to your imagination. But again, you don't want to hand over your physical gold to a custodian because you don't know if they're going to be around, which is really no different than in Bitcoin. You want to have your own private keys and not hand it over to somebody, right? So it's really the same principle. But
so do you know I was always wondering, I didn't research on that. So what's the discount you would get when you take the gold out of the vault, keep it at home, and then you want to sell it? So what's the discount for the chemical analysis and all this kind of stuff? Is it the same price? Is it like a little bit?
Standardized coins, I believe, have the smallest discounts. Bars that have some SA might have, I think it's still in the single digit percentage. I've never personally actually had the bar verified when I tried to sell it. As a matter of fact, I never really sold anything. So I don't know the specifics, like what the discount is. I probably would not try to take it to one of those we buy gold shops, right? They probably have the biggest discount. and they probably deal in smaller dollar values. But if you have really a lot, you probably have to take it either to a bank or to a bullion dealer that deals in large volumes. I guess one of the best known places in Canada is kitco.com. They both buy and sell coins and bars in big volumes. And
Well, and I assume people would buy gold just as a store of value. So
it is a store of value for various reasons. It could be just an investment, even if there's no other motive behind it. It's just another asset class with its own dynamics. And
So as I understand the idea behind buying gold and storing the value in gold, because in comparison to fiat money, the fiat supply is unlimited.
correct.
And
yes.
actually, well, in the next slide, I will have a slide that shows the supply of money. But yeah, let me finish the disadvantages of gold. That's authenticity, the divisibility. If you want to use gold as money, so it's quite difficult to divide
Yes.
and then buy a small amount of, like, you won't pay for coffee, the same thing as with Bitcoin. And also transporting, like carrying around gold it's not, it's heavy, it's not safe. And
You're right. Even if carrying a couple of 1 ounce coins on your pocket, it's like carrying $3,000 Canadian on you, right? How would you feel?
yes. And recently I wanted to take a look, like, well, first I had a question: why would central banks buy gold? So if this is just a barbaric metal that some people see it this way, it's a very ancient metal. We used this as money 2,000 years ago. Now we all in fiat, and why would central banks keep gold? Obviously, the United States has the most reserves in gold. This is the share of the foreign reserves. So
Okay.
historically, after the World War I, I guess most of the countries from Europe moved their gold to the United States, and it stayed there. Germany has a lot of gold, and they actually repatriated their gold from the United States back to Germany. So these are mostly the developed countries, but recently, in the last couple of years, countries that have problematic relationship with the United States, they are buying more gold. Like Russia, for example. Let's see. Yeah. Well, the left column is 2008. The right is 2018. So Russia dumping the reserves of the U.S. dollar and buying gold. China does the same. Turkey, Iran is buying more gold. And interestingly enough, Canada doesn't hold any gold in reserves, Canadian Central Bank. So what does it mean for the world economy? I'm thinking, like, why would central banks would start buying gold and keeping it in reserves? Well, that's probably because they're losing trust in the world reserve currency that we have right now and we had in the last 50 years, which is the United States, the 50 or 70, which is the United States dollar. And because of so this is the money supply.
They also want to diversify into other asset classes too. Plus, in some cases, they would use the gold to trade with other countries that are in the same situation. That other countries that want to diversify away from the U.S. dollar, so they can also use it to trade, buy oil or.
Yeah, so I would suggest that these countries that buying gold, like central banks, they plan to make the settlements in gold. So between the countries, like, do the trade with some sort of accounting,
Yeah.
and then once in a while settle in gold. And I was thinking that they might even use the blockchain to keep the accounting, because it's very difficult to move gold every day for the settlement. But every month or once a quarter, once a year, I don't know, you just look at the balance, the difference in trade, and then you just move your gold once a while. So, and this is the supply of the fiat money, the US dollars. In 1959, there were 286 billion, and in 2019, it's almost $15 trillion. So yeah, and that can grows exponentially. They need to print money to pay for their debts, for interest. And
I think more significant is the growth of the money supply in relation to the size of the economy, and that probably has been going up as well. This is just the absolute value of the dollars, right? But the economy has grown as well. But as a ratio of the size of the economy, it probably has been growing up as well, which is the most significant.
Maybe I should have added another slide with the growth of the economy, but we
Yep.
know that it didn't grow at the same rate.
Yeah, we know.
That's for sure.
Not just the US dollar, but the other major currencies too.
So yeah, this is basically why you want to hedge and keep
Yes.
your savings in gold, because if you keep dollars right now, so. And let's look at Bitcoin in comparison to gold. So there is this guy, it's called Plan B, and he's on Twitter and he has a blog. So he was actually researching and analyzing the stock to flow ratio of different metals, gold and silver, and he was looking at the stock to flow ratio of Bitcoin. He found correlations, and according to his analysis, in May 2020, after the Bitcoin halving, whatever you call it, the price of Bitcoin should be around $55,000. So, and then what is Bitcoin? Like, how you compare it with money? It's costly to produce, it's unforgeable, you can't make a fake Bitcoin, and in comparison to fiat and other altcoins, so because there's an argument, yeah, well, you can just copy the code and then you have unlimited supply of cryptocurrencies, Bitcoin Cash, Bitcoin Gold, and so on. So fiat and some altcoins, like Ethereum, they don't have a supply cap. For example, low hash rate, which is easy to produce, not so expensive, and sometimes they have an individual or a group of developers that can change the code, they can change the supply, they can change anything about the currency, so that is not so good. So, and since we are talking about the digital tokens, digital coins, cryptocurrency, I also took a look at the gold-backed stablecoins. There were a lot of stablecoins created in the past maybe 3 years. I think it's over 100. In general, there are 3 types of stablecoins: off-chain collateralized by fiat or by gold, for example; on-chain crypto collateralized, such as DAI is the most famous stablecoin; and algorithmic. So I don't know a lot of successful algorithmic stablecoins. The most recent is Ampleforth. But I took a look at the gold-backed stablecoins, and out of 27 gold stablecoins created in the last couple of years, 16 closed. So that's the highest rate between stablecoins for the projects to get shut down. Mostly it's because of the storage costs and high cost of audit. And also people don't use the gold-backed stablecoins as a payment method, because gold itself is not really stable, it's volatile in comparison to US dollar. So the pros that we have is that it's easy to transfer tokens and easy to own gold, well, also questionable to me, because if you buy gold through your bank account, it's kind of the same thing. So you just do it electronically, you never see your gold. Same way as here, so there is a third party that's keeping the gold, and you can transfer your token from from your wallet to someone else. Maybe the only pros or benefit is that you can do it anonymously if the protocol allows for sending the gold-backed coins to random addresses, because some of them you have to go through KYC and register your address. And the cost is obviously there's centralization, or if we're comparing that to Bitcoin, and you need to trust the third party that they are keeping the gold.
Most of the time is a third party you never heard of.
Pardon me?
Most of the time, the third party you never heard of them before.
So and that's another thing, because all of the startups, they're new. So at least when you're buying gold from the established companies or vaults or banks, you know they have certain procedures, they are regulated, and they've been out there for a while, so they're trustworthy. But new companies, they're just startups. You don't really know where they are in the world. DGX in Singapore, for example, it's started in 2015. And this is the most successful gold-backed stablecoin. So there's also regulatory risks, because it's a new thing. It's not regulated, and you don't really know what's going to happen with this project in the future with this new legislation. Some countries may be blocked from trading of those stablecoins. Then again, volatility of gold plays a role. Plus, when you start stockpiling gold somewhere in vaults, you take the gold out of the circulation, that may affect the price of gold on the market. And there's always the risk of losing your private key, just like with Bitcoin. This you compare with your gold, like in the bank, for example. If you lose your password, you can always go and show your ID, get access to your account. That's much easier. And one of the, as I mentioned, the most famous and trustworthy projects in gold-backed stablecoin is DGX. They started in 2015. They're based in Singapore. They raised $200 million in Ether in crowdfunding. They keep, one token is equal to 1 gram of gold, and they have 111,000 tokens, which are equal 111,000 grams of gold in their vault. But I checked their 24-hour volume, it's only $38,000. So it's very low, even if it's like the largest, the most trustworthy project. And on their website, you can track everything that happens with the gold. You can see the pictures, you can see the audit, you can see the documents. And they're all on the blockchain, on the IPFS, which is a distributed file storage. So they try to make it as trustless as possible. However, there's still risk of this third party. These are just pictures. You don't really know if it's not a real piece of gold on the blockchain. And if you look at this project, that arguably this is more of a supply chain management tool for gold rather than a stablecoin. So yeah, you can track all these pieces of gold and who owns them. But you still need to, you don't own the real piece of gold. You still need to redeem your coin if you want to get it. And it's questionable if someone would use this gold-backed tokens as means of payment.
I never fully understood the use case for gold-backed tokens. I don't know what you can do with that you cannot do with the other mainstream methods, whether you want to hold gold or paper gold or stable coin or fiat, or I'm not sure why this is necessary or what it does that we cannot do with other mainstream tools.
Well, it's this. If you look at the token, it's easier to transfer. Maybe you can transfer to anyone. It's borderless. But then again, there's still a centralized party. And then I looked at another project which is called the Anthem Gold. They were last week at the Futurist conference, so they were presenting, and their website, there is a list of countries that are not allowed to have those tokens traded, so it's not basically censorship resist. So this also is questionable for me, if it makes sense. Maybe if you are in a country that you don't have easy access to gold, I don't know, developing countries like Africa or Asia, but you have access to internet and crypto assets, maybe you want to be exposed to the gold-backed tokens. Maybe that's the only use case for them. All right, and we are at the end of the presentation, and as always, remember to back up your seed phrase when you create a wallet. That's the only way you can recover your funds, and never keep your coins on an exchange. Okay guys, do you have any questions, any comments? Yeah. Just don't forget to grab the mic.
How you see the stable gold coins as a replacement for the dollar or any other fiat peg coin?
Well, I thought about it, and that probably won't be a stable coin. So as we spoke, the central banks right now, they start to stockpile gold in their reserves, and the logical situation right now, they use the US dollar for the settlement, and they use the SWIFT system to send the money across the central banks. What may happen, so the central banks would create some sort of the accounting system, maybe on blockchain, and they would start trading their tokens on that blockchain, like paying each other, and every now and then they would exchange their tokens to gold. So the final settlement will be in physical gold, so they would ship back and forth. But the gold-backed tokens from private companies, I still don't see it as a viable use case, because, well, there's a regulatory risk. The United States made gold illegal once already, so what happened once can happen again. So your gold-backed crypto token won't cost anything at all.
I would like to pivot the question in a different direction. Do you foresee some country, maybe perhaps a small country, replacing their paper currency with a token, legal tender?
Like crypto token?
Like maybe Estonia or some country like that seems to be at the forefront of this. Perhaps they might choose to actually have their national currency on the blockchain in the form of tokens instead of paper money.
But it's going to be a national currency.
The national currency.
Well, the power of the central banks in every country is that they can print money at their will,
Right.
as much as they want. That's what they have. So, and the blockchain for them will be just a delivery mechanism. It can be a banking system, it can be a blockchain. I don't think that they would replace completely their currency with the gold standard or Bitcoin standard, for example. So I don't think that would happen. But some countries are more, like, I think China announced that they're going to issue their own currency on the blockchain.
Yeah, that's what I meant.
Yeah, well, that's going to be centralized blockchain,
Yeah.
probably a database.
Gentlemen. Hi.
Yeah.
Can I ask some questions?
Yes.
The word crypto, number one. Just define the word crypto. The reason why I'm asking to define it is to sort of get a grip of the coin itself, and I'm talking about Bitcoin or gold-backed coin or whatever the case is, and how can you, like when you have the coin itself backed by gold or backed by a mine and so forth, how can you be, I'll use the word tracked, or how how do you keep track of it, like your wallet or whatever the case is? You understand what you understand the question? It's loaded. It's all over the place in a sense. So crypto first, the term crypto, right?
Well,
Ju-
when I say crypto, I mean cryptocurrency.
Yeah, we understand. We
In this
understand. So okay, so that's one.
context.
And then the word, the coin itself, like when it's made back by gold, right? How do we keep, like, how do you keep track of it? Like, you know, you have your money in the bank account, at least you can go there and see it, but how do you keep track of your cryptocurrency?
What they do, they keep the gold bars in a vault.
Right?
The company itself, the custodian, and like DGX, for example. So when they bring gold into the vault, they take pictures, they take documentations, they put everything on the blockchain, and they issue a token to the amount of gold they have. One token equals 1 gram of gold. When they bring 1 kilo of gold in their vault, they issue 1,000 tokens. So you don't have gold inside of your crypto wallet, inside of your mobile phone,
Well,
but you have a token there. And technically what they promise, you can send this token to them and they will send you gold, 1 gram of gold. Obviously you have to pay for the postage.
so is it a company that's selling the gold through tokens, or
Say it again?
are you buying gold with tokens, or are you storing your gold and then you're provided with tokens through some company, as to say, this is how much gold I have in
You buy
my vault?
crypto tokens with
Right.
money, with Bitcoin.
I
or
understand,
with
backed
USD.
by gold.
Yeah, backed by gold. You don't send them gold and they don't give you tokens. They already have gold and they issue tokens. You just buy those tokens and you control those tokens and you can spend them. You can send them.
So the tokens that you're controlling, right?
Yeah.
It's backed by gold.
Yes.
So the gold is yours.
Yes, you can exchange your tokens that you have, crypto tokens, to the physical gold.
Can you save your tokens?
You can keep your tokens as long as you want.
Yeah, that's what I'm. Yeah,
You
okay.
can send your tokens to whoever you want. So that's
And currently, what's the I'd say, I use the word the matrix factor. Like, which world right now is in this digitized, because I say DIGIS, digitized currency, because I guess that's what it is too, right?
DGX
Yeah,
is the name of the company.
yeah, but we're dealing with digitize, or just we're dealing with technology. I'm saying, which part of the world right now is using this technology?
That's online. That's on the internet. Blockchain is everywhere, so anyone can.
And it's
use it.
called blockchain, right?
Yeah, it's on the blockchain. But as I mentioned, the volume, the trade volume, of in the last 24 hours, it's only $38,000, which is almost nothing.
But it's just started though, right? The process.
Well, this is the oldest project. They started in 2015. So so it's only 4 years. Maybe it's not a lot for traditional markets, but for
Is the 200M? Is that in?
they raised through crowdfunding $200 million
$200 million against the goal?
in Ethereum. No, so like I assume that was ICO. So they were selling tokens. They raised Ethereum, then they bought gold with the funds that they raised.
Okay, but in order to raise that money, did somebody have the gold in the bank or have the gold stored somewhere?
No, usually how it works, you create tokens that this company has two types of tokens. DJX which represent gold, physical gold, and DGD, which is a token which represent shares of the company, so to say.
Right. I've heard the term mine tokens or mining with tokens. You ever heard that term before?
Mining
Yeah.
for cryptocurrencies, yeah, it's on the blockchain that use proof of work.
Right.
You use the process of solving the cryptographical puzzles, and if you solve it, you finalize the block and you get a block reward. So this is how Bitcoin works, how Ethereum works.
Okay, thanks.
Maybe in the context of this presentation of gold and Bitcoin, mining is a little bit confusing, but they are two different things. You don't have a shovel and you don't mine Bitcoin out of the ground.
trying to get a spreadsheet and trying to get things itemized so I can move to the future. You know what I'm saying?
Yeah.
No, I have one question about gold-backed tokens, especially if they don't own a mine and they have to buy on the LBMA at the full $1,500 price. I understand that some of those tokens are only fractionally there's only a fractional reserve, maybe 10% in the bank, and they're not fully backed by gold. Is that?
Well, what they say, they're fully backed by gold. One token is equal to 1 gram of gold, and you can audit the blockchain and all the documents are there. Well, I didn't do the entire audit, but this is what they claim.
I want to point out that even though they raised $200 million, the 111,000 tokens are only worth $5.5 million US dollars at today's $1,500 gold price.
Okay, so they're 100% backed by the gold that they say. If it's a 1 gram,
You have to trust what they say unless you go there and see for yourself.
yeah.
It's a
Because
trust thing.
I know of one new coin, the lira, and it's only about, they don't say how much it's backed, but they admit they're only fractionally backed. So we have to find out just how much they are backed.
I guess so.
Yeah.
Are you worried whether the Tether is backed or not?
You know, pardon?
Okay. You're raising the same question about the USDT, right? Whether it is backed or not, and yet most people don't seem to care, right? It's still trading normal, right?
That's an interesting point, and I was looking at this too. So Tether started like fully backed with US dollars 1-to-1, and then they had like a few scandals, and then they even changed the description on their website that it's not backed 1-to-1 by dollars, but by dollars and other assets. And there was some information in circulation that they only have like 74% of backing of real Tether. However, because it's so widely used around the world that people don't really care if it's backed or not. So they just use Tether. It's the biggest stable coin. It has like 3 to 4 billion of
Yeah.
coins of the supply, and the daily volume is over 10 billion,
Yeah.
easily, usually. And I read the news what happens actually in Russia when Chinese entrepreneurs, they send the goods from China to Russia. So they sell it for cash at local markets, and they bring this cash to the counter where they buy Tether with cash, $30 million a day. And they send Tether from Russia to China, not through the banking system, obviously on the blockchain, and then they do the same operation backwards. They exchange Tether for yuans, and they buy goods in China. So and no one cares among them that it's not completely backed. So that's interesting how for the dollar it took like 40 years to get off the gold standard, or even more. For Tether it's only 4 years.
Well, if you're going to hold Tether for 1 day or less, chances you're probably not going to care whether it's backed or not, because you're going to be out of it quickly. But if you're going to be holding this for months, you probably will care if they're going to be around. So you have to do your own due diligence and decide if you trust them, or would you rather have own gold in a different form.
I had an interesting email and call yesterday from Georgia. In January, I was at the big Bitcoin conference in Miami, and I met a financial group, And we got into some discussions about cryptocurrency, especially gold-backed cryptocurrency, and gold being held potentially. I said, we have RRSPs here, registered retirement savings plans, and ETFs. I mean, we have other savings plans too, and they said this is very interesting. Maybe we can get more investment into gold and crypto if we approach the RRSP angle, the IRA. So the K401 IRA. Well, yesterday I got an email. They successfully did put gold and crypto into an IRA. So we had an idea here. The Americans actually went and did something. So I can send you the email that you can now in the States invest in gold and crypto through an IRA.
So the IRS now allows crypto to be part of an IRA. It's
Yeah,
an
that's
approved
right.
investment.
I just got the news yesterday.
That's good. That's good news
Yeah.
for cryptocurrencies.
So, can I introduce my friend? we have Marco here from Ecuador, and he owns a gold mine, and he's here to get onto the stock exchange, combination of the Jamaican and the Toronto Stock Exchange. So he knows a little bit about mining, and potentially in Ecuador, having a government-backed, having a gold-backed crypto issued by the government, by the national bank. Anyway,
Hi, but and I understand your points, no? And the problem is in different countries, the central banks have the power about the reserve of money and the gold because the central banks buy the gold and make the money, and my country have take a certain advantage because. We use the U.S. dollar as currency. We don't make the central bank don't need to make the money. Only use the U.S. dollars and need to protect the money circulation in the country because if you much dollars go out as the economy have be in problems. No? And in this moment. Just 2 days ago, maybe last Tuesday, the government approved they use the electronic money, and the project names is the electronic wallet. You can charge of money of your electronic device, and you can pay or buy or do any transaction about the electronic money. But with the private banks and with the central bank. This is the open doors to maybe we can use the cryptocurrency in this time in my country. But the thing is for us, like I do mining, is find a way we can do our activities and put the gold in the secure place and don't move a lot because the cost of move the gold is high. But if you can find a way, we can find the both systems of the gold system of the crypto systems. It make works. If we can certify about okay, I got this quantity of gold, and we can buy and sell with the crypto. No, what is the next step we can do to find this way, this path? We can work together. The miners in my country, in the region, has been worried about the security in our country because move gold is very dangerous. Now, if you can find this way, I think the system with the cryptocurrency make it work and make it successful because the people have once used the system because it's more secure, but we can fix the problems, no, for have the successful in the future.
Well, I understand that moving gold is dangerous and costly, and you want the people to buy and keep gold electronically. But it doesn't have to be a stable coin. Right now, most of the gold trade is electronic, so it's through brokers and banks. In Canada, you can go to online bank and you can buy.
No, but why you can certify you got the gold electronic? Because if you in this moment
It's working.
in this moment my online job has started for maybe a 500,000 ounce of gold certified, but need money to buy equipment, my machinery, and buy machinery and everything what need to do, but need certify if you I have this goal and for can raise money or can give money for buying new equipment. If we can have the systems certify this amount of gold I have in the mine. How can it works to the crypto system? Crypto system, what it needs to do to can buy or sell using this support, because the problem for crypto is not have the real support in the central banks to make business, no?
So are you asking how to raise the money to start the mine and tokenize the gold that's in the ground right now?
Yes, out of the way.
Well, the same way as this DGX did. So they raised $200 million in Ether during their crowdfunding campaign, most likely ICO. But they did this at the right time. Right now, ICOs is a bad word to say, because most of them were scams and people are not so eager to participate in ICOs. But it's just the same way as raising traditional funds, I would say. But yeah, you can do it on the blockchain, but first it's hardly regulated and people are very cautious of buying gold.
I think he said that they're doing an IPO on the stock exchange, like an IPO of shares.
Well, I think from what he was saying, it sounded very similar to a future contract. So a future contract, the way it works is you measure the potential production of your unit, regarding if it's mining or just regular crops. And basically you have a future contract where you were able to extract liquidity to do the mining and the whole thing. But that's been in the industry for so long. It's just why not use it? Now you can still do ICOs. Even right now, if you go to ICO drops, they're funding around about 80% of the ICOs that are being launched right now. They're launching about 17 a month. So I don't think it's completely out of the scope to launch an ICO right now and get successful metrics. But you will need to have like the DGX guys did, well-drafted business model, and third-party firms that are able to ensure the backing, the practice, that the gold is there and all that. But I think it's doable. The thing with the only issue that I think is that what will the people that invest will be for them, which is usually the...
Well, maybe if you sell gold at like 50% discount for anyone who invests in tokens for their risk.
Right.
So
You will need to polish
That's
that,
what
right?
streaming companies do. They will give you a loan now, and then when you produce, they'll buy you gold for a small fraction of the price.
I don't think it had been done before, like the ICO for the gold mine, but sounds like a viable idea.
never doing before.
Yeah, right now, we're negotiating with the boys at Block Station, you know Marco and Jay, and they, for the first time in history, have not an ICO, but an STO, a secure token offering, and they're doing it jointly on the Jamaican Stock Exchange, which is now apparently the world's top for the last 4 years, since 2015, and in conjunction with the Toronto Stock Exchange. So I could see the idea of a futures contract whereby you issue the tokens, but you do not yet have the gold, but you are going to mine the gold. And so you issue a futures contract at a discount of, say, 11%. And then when the gold, when the machinery is bought and the gold starts being produced in large enough quantities, then the refined gold would be deposited in a top bank and then fully back the tokens, the securities tokens that were issued. So the STO is the new way to do it, and there are several companies being formed this way, completely legal with the Securities Commission in the States and the OSC here, and of course starting with the Securities Commission in Jamaica. So we're meeting with some lawyers on Friday that are coming up from the Jamaican Stock Exchange, so we'll tell you more next week.
That's great.
Yeah.
Just one other thing, you can also offer dividends. So tokens are pretty good for dividend distribution. So the holders of the tokens will get, it's usually in cryptocurrency, it's usually known as stake. So if you stake your tokens, you will get a reward. The same thing can happen with the gold. Let's say that you hold the token and gold is extracted, and at that point you can distribute between the holders a small percentage of that gain, and eventually until you finalize the whole extraction.
Yeah, it's almost like the shares of the company.
Yes.
So yeah, that's a different approach. Also possible.
We're covering new territory here.
So Mayor, when did you start investing in gold, and why? What did you like about it?
I guess being a hedge against fiat currencies, as well as an uncorrelated asset class, which maybe at the time I thought that it was not correlated to stocks or bonds, and then I realized that it is, there was a time when the US dollar and not gold was the real safe haven. And it was quite a few years, I would say from 2012 until maybe last year, and then finally it's only this year that gold is actually acting as a safe haven. I also found that gold does very well in a world of low interest rates, and it looks like finally we are beginning to accept that low interest rates are going to stay for quite a while, because I guess the economy cannot really handle higher interest rates anymore. So I do find some attractiveness. I find it relatively easy to buy, to hold. It's easy to understand gold mining stocks compared to understanding technology stocks. It's a relatively simple concept. It's just they have the stuff, they have so much of the stuff, and it costs so much to get it out. It's simpler to analyze. Yes, gold mining does have a lot of unpredictable hiccups, and you have to take that into account as well. I don't know, I just find it simple to understand, and I guess people believe in it, and it has been around for a long time, and that's why I find the value in it as well. So far it's done well.
Especially recently, the price just
Yeah.
went up.
There's also many ways to leverage yourself. You can just buy coins, or you can buy shares one-to-one, or you can be super leveraged as well. So there's many ways to do it.
And the gold, I guess, is more liquid market than Bitcoin at this
Right.
particular time.
Right now it is, because there's a lot more different ways to do it.
And the market cap is much larger. It's like around 8 trillion versus.
Well, the
2.
total value of all the gold has been extracted is like 8 trillion. Mind you, the market cap of Bitcoin is probably larger than the combined market cap of all the gold mining stocks put together, which is really not that much. I mean, the top 3 gold mining stocks together have a market cap of maybe 50 billion, 50.
But I'm talking about the physical gold. It's
Oh yeah,
physical gold.
yes.
All right. If you guys don't have any more questions, we guess we'll wrap up our official part, and we'll still hang out here for the unofficial part, and see you here next week at That Crypto. Thank you, Mayor. Thank you, everyone.